Welcome back to Turning Hard Times into Good Times. I am your host, Jerry Taylor, and I'm really pleased to have with me once again Quinton Hennigh. Dr. Quinton Hennigh is the president and CEO of Novo Resources Corp., and he has been on this show before, so I won't read over his impressive bio, but it is available at the Voice America Business Channel on my webpage there, at this show's webpage. Of course, Dr. Hennigh has had extensive experience as an exploration geologist with major mining companies as well as juniors, and he is quite a creative thinker for a geologist, and he's come up with some ideas that I think are really very exciting, which is why Novo Resources is one of my favorite. In fact, it is my largest personal holding in my own retirement account. So Novo Resources trades in Toronto under the symbol NVO. You can buy it in the United States, as I have, under the symbol NSRPF. There are 76.5 million shares outstanding, and earlier today I was trading at around 55 cents U.S. money, giving it a market cap of around U.S. $42 million. Well, this is a most unusual gold exploration story that I think you will soon... You're going to hear a lot more. I think the investment community is going to hear a lot more about this story, and it's really it's very unusual for a couple of reasons. First of all, exploration geologist Quinton Hennigh, who we're going to be speaking to now, has envisioned a new explanation for how the Great Witwatersrand deposit of South Africa was laid down. And that has led him really to where he's working now in northwestern Australia on the Beaton's Creek project. And that Witwatersrand deposit, actually the proof of concept has already, I think, been revealed, that the concept of how that Witwatersrand deposit was laid down, and Dr. Hennigh has now gone out to northwestern Australia and has established potentially another, well, at least a Witwatersrand look-alike, geologically speaking. So that's one of the reasons it's a very special story. But secondly, and probably of more immediate importance for both near and long-term success for the company, is the potential for Beaton's Creek project to generate positive cash flows fairly early on, potentially as early as the first quarter of 2016. So I want to thank you, Dr. Hennigh, for joining me again today. Thanks so much for taking your valuable time. We're speaking to you, as I understand, from down under. You're in Perth today, is that right?
That's correct, Jay. Yeah, I appreciate you taking the time to talk.
I was just mentioning the Witwatersrand concept and how it was formed, and that we've talked to you about before on this show. It is an exciting story, a very interesting story if you're in the least bit interested in geology. The eons of time that it took for this deposit to be laid down, and you come up with a new concept. So I would really encourage first-time listeners to this story to go to the website at Novo Resources website and learn more about the concept of how the Witwatersrand was laid down, because Dr. Hennigh has found a similar geological environment, and all indications so far is that he is onto something that is very similar, and potentially only time will tell whether it can be compared economically to the Wits. Dr. Hennigh, as you explained to me early on, you were always quite interested in getting some early cash flow. And this particular project seems to hold some great potential for that. I mean, unlike most projects that you and I are familiar with, it takes years and years before you can start to generate cash flow. But what is it that makes this unique in terms of its ability to provide some early on cash flow?
Yeah, sure, Jay. There's a few components to the answer to that question. The target size is quite large. We're looking at a system that could have large-scale potential, like you've alluded to with your introduction. But like you said, I'm focused on moving the company towards cash flow. The thesis behind that is if we have cash flow, we then can explore the larger project without incurring a huge amount of dilution. Exploration dollars are hard to come by these days. Financings tend to incur a lot of dilution. A lot of companies have gone down that path, and it's not ended well. So the way I see this is if we can get to early cash flow, we can sustain the company while we go through the exploration process. And the thing that makes this thing special is that these conglomerate beds, these beds that host the gold, are actually nearly flat lying, and they outcrop over a fairly broad area where down to about 20 meters they've been thoroughly oxidized. And this oxidized material, this oxidized conglomerate material, contains coarse gold. So we've got a couple of advantages. One is it's shallow. It's easily mined. You know, we're looking at basically ripping and excavating with no drilling blasting. But the other component is cheap recovery. We're looking at coarse gold that can be recovered in a gravity type scenario. So the processing costs would be quite low. The mine that we're looking at pushing forward with will be modest scale. We're not talking about a huge operation, but it's one that we think will generate pretty robust margins, pretty robust cash flow, and allow us to pursue the bigger goal.
Okay, so I know that you came up with a maiden resource maybe 2 years ago, close to that. There was over 420,000 ounces or thereabouts and 1.47 grams per ton. But you've really come up with some much higher grade assays recently from bulk tonnage samples, very extensive samples that you've taken. I know you're coming out with a resource pretty soon, but it looks to me as if we could be looking at something that could be perhaps double that 1.47 grams per ton. I mean, just eyeballing and doing some back of the envelope calculations of the extensive assays that you've made public. I know you can't comment exactly because you don't have the numbers yet, but what kind of numbers might we expect, if you could comment on that?
Yeah, Jay, I can answer that with a few things. First of all, yeah, we're expecting a resource back from engineers in, say, a week or so. Mm-hmm. And it's kind of comparing apples to oranges a bit. Mm-hmm. If you look back at our initial resource, it was drilled in a restricted area of a little over half a square kilometer. Mm-hmm. The drilling was predominantly where the reefs dipped down into the fresh material. So this resource is down into the material that's not oxidized yet.
Okay.
And it was also modeled in a much different way than we're going to be doing in this next round. So the resource that we announced in 2013 modeled, for example, on 3 meter minimum widths, which effectively diluted the grades of these reefs, which are often, say a meter or two thick. And as a result, we saw a grade of 1.47 gram. Now, initially, you wind back the clock, gold, I think, was maybe $1,600 or $1,700 around that time. Mm-hmm, mm-hmm. And you wind back the clock, and economically, it looked like that would be potentially suitable for an open pit mine. But gold's fallen quite a bit. Australian dollars, it's not quite as bad. Australian dollars have dropped, so gold has come up as well. But so there's a bit of a trade-off. But what we are looking at is kind of a completely rejigged resource. So yes, there will be data out of that initial resource that's used, but what we will end up doing is capturing a subset of that initial resource, and then we'll be adding to it the area that we've more recently drilled, this oxide target area. So we'll be losing some tons and probably some ounces out of that initial area, but we'll be adding to it some oxide ounces, which is the focus for this conceptual first stage mine. Now, as far as grade goes, yes, you'll see an improvement in grade. We recognize the coarse gold effect, a while back, and we've tried to address that in both drilling and the surface trench work that we've done. The caveat I'll put there is that if you can imagine drilling a flat 1 meter thick reef with an RC drill, as the drill goes down, we sample at 1 meter intervals. So more often than not, you're going to arbitrarily split the reef into two, the conglomerate horizon into two sample intervals. So we have a bit of a conundrum there. We got these RC results, which if you put them all in a bag and average them out, come out one number, but then we have these highly targeted costine samples where we're able to sample from the top to the bottom of the reef very precisely, and they're coming out a different set of numbers. Now, it really all boils down to how the resource estimators treat that data set.
Mm-hmm.
They're relying on both sets, both the RC and the costine samples. But if you look back at the last news release I had about results, which I think was August 20th, you'll see that an average grade for the 470 some odd costines we have right now is about 3.3 grams.
Mm-hmm.
Our resource probably will not reflect that because the RC samples are also taken into account, but we will definitely see an improvement in grade over that initial one.
Okay, so it's really your costine samples were larger samples, were they not? Probably more representative of the grades potentially.
Correct. Yes, we took something on the order of 40 to 60 kilograms off of each costine. Yeah, so they're larger samples. They were processed in a larger way. We took a larger split to analyze. So we feel those numbers are fairly reflective of representation in the grade of the reefs.
Now, Dr. Hennigh, you recently announced a couple of other properties that you've acquired that also have high-grade free milling gold occurrences, and are you looking possibly to have those as contributing to production in the near term?
Well, correct. Yes, we looked around. Gold because it's come off the availability of properties is quite high right now, and the price is reasonably cheap. It's basically a buyer's market. And we looked around at what might complement what we're doing at Beaton's Creek. The projects that we picked up both from Talga Resources and Northwest Resources are different style of gold mineralization. They're what are called orogenic lode deposits. They're hosted by or around quartz veins, things like this. But these projects contain coarse gold, and they could potentially complement what we're doing at Beaton's Creek. Yes, they're proximal to the project area. They're all within a few tens of kilometers radius of our Beaton's Creek project. So looking down the road, we see advantages in bringing, say, some potentially high-grade coarse gold mineralization into the picture of production.
Well, of course, the coarse gold is important because of the simplicity of winning it from the ore, right?
That's correct, yes. The coarse gold makes for easier gravity recovery.
And easy gravity recovery and simplicity of a milling process reduces capital costs over what might be required if you have to have more complicated metallurgical processes.
Yes, capital and operating costs, correct.
Right. And these are a couple of reasons why you're expecting, potentially at least, to have very robust and good margins, as you noted earlier. Well, just this past week, you come up with, I think, what is a very interesting and important announcement. You announced that the company has purchased something called an IGR 3000 gold plant. Talk to us a little bit about that and how you plan to use that, or how that fits into your plans to head towards production, hopefully.
Sure. So this plant is nearly new. It was available. It was reasonably cheap compared to its initial price. I think it was probably a third or a quarter of what the initial price would have been. So we got a very good deal on it. It's not a huge scale plant, but the most important part of the plant is that it has two falcons, which are centrifugal concentrators on it. And it's got a design that we could modify to handle what we're going to call trial mining tests at Beaton's Creek. So the concept is to move the plant over to Beaton's Creek. It's in North America right now. We'll move it over shortly. And then we're going to file permits to potentially mine, some we'll call them bulk samples, but they're really large tonnage, like a few tens of thousands of tons of material. There's a lot of things that have to come together in the interim, but we project being able to do this trial mining, say, by early January of 2016. The trial mining we feel is important because it will give us a better sense of grade and potential recoveries of gold out of these types of ore. We have a lot of metallurgical work at this point that tells us it should be quite favorable, but we need to prove that. Proof is in the pudding. So
sure,
this plant is capable of processing around 30 to 50 tons per hour. we do need to have what's called a comminution portion to this. Is basically the crushing and grinding of the material beforehand. But we're sorting that out right now. So we think we can feed this plant, like I said, 30 to 50 tons per hour of crushed and ground material that can be processed and hopefully recover appreciable gold. Whether we can't prognosticate about cash flows and stuff out of it, but we are hopeful that it will be productive.
Well, I know that I think you indicated before that some of the early metallurgical tests were suggesting that gravity could recover something on the order of 80%, if I'm right. And so if this plant could do that, if it, as you say, the proof is in the pudding, if it could do that, 30 to 50 tons and 3 grams per ton or so, it works out to some pretty attractive numbers on a very small scale, but nonetheless could be attractive, I should think.
It does, and it'll be a leapfrog to the bigger operation that we have in mind. We're once we get a resource out, we're going to start putting together a mine scenario for an economic study that would be out later this year. That would encompass something on the order of 1,500, say 500,000 tons per year, so 1,500 tons per day. So this trial mine is definitely a step in that direction.
So that would be a goal potentially for next year to achieve that level? That's
right, yeah.
1,500 tons per day sometime in 2016?
Correct. We think we can move that project forward very quickly on the back of all of the other work we're doing. So we're shooting for, say, mid to third quarter 2015, or 2016, for that scenario.
Right, exactly. Well, I think it's very important for listeners who are focused on this industry to realize that, you're an exploration geologist, that's your forte, but you have also brought on an engineer who has some good experience producing gold and designing plants, as I understand it. Could you just talk a little bit about the engineer that you brought on and let our listeners know about his skill sets?
Sure. He joined us. His name is Simon Pooley. He joined us about 3 months ago. Simon and I have been working quite closely on advancing the production side of this project. So in a very short time here, he's helped us, steer things towards, we'll call it aggressive permitting, as well as economics studies that we're going to need to complete all this work. I think over the next 3 or 4 months, you'll see a lot of news come out that clearly shows the company is heading in that direction. It's difficult to talk about those things until we have the resource out. So we got to take this in stepwise fashion, but we'll get the resource out, and then I'll be able to talk more and more about all the things that Simon has been doing for us since. But as some people know, Simon helped build the mine nearby, which belongs to Millennium Minerals. It's an operation that's based on a whole different ore deposit, but it's been a reasonably successful mine, and in this gold environment, that's important. So he's recognized the potential of our property and decided to join us, and we're very grateful.
Will you be doing a feasibility study before you produce?
Look, in the real world, most projects would go towards feasibility level study, but we have a project here that we see as being a reasonably low capital. If you follow the 80-20 rule, you can get 80% of your answer for about 20% of the cost. You can get 100% of the answer, but you're going to pay a lot more for it, right?
Sure.
So we think that we can get economics put together. Yes, there'll be plus or minus 25 or 30%, but we think we can get economics put together to a satisfactory level to go out and source capital for this project. A lot of people are aware of what we're doing. They know that this is a good project. I get requests all the time from people who are interested in helping us build this project. I can't throw numbers around, Jay. I wish I could, but it's not going to be a huge dollar exercise. We're talking about a very, very modest amount of capital.
So you're not at all worried too much then, I guess, about finding the capital you need to get into production, at least in these early, lower level stages?
I'm not. We actually have some pretty good friends that are close to the company who I think will be able to help us move in that direction.
I know that it's the Beaton's Creek project that you're working on, and that's what you're focused on right now, but you have a considerable amount of potential exploration territory around there, do you not? Could you just comment briefly on the extent of potential, say lateral potential?
Sure. That goes right back to what I said at the beginning. We're looking at taking this in a stepwise fashion, so developing this, getting cash flow, and then looking at the bigger picture using the dollars for exploration. So at Beaton's Creek, we've kind of left the sulfide be for now. We haven't drilled holes out into that country for over a year now, or we haven't done really much work at all, save a deep hole we drilled in November last year. But we do think that these reefs will continue down into the basin for some distance. And, once again, the size of that could be substantial. We think there's potential for extending these reefs in, on the order of a few square kilometers, we'll call it, out into the basin. That's one area. But up at Marble Bar, for example, we haven't really focused here recently on chasing up the North Contact Creek area. And people can review some of the data in our news releases as well as our presentation. But we found a reef up there where we're getting samples, up to half an ounce per ton. Very similar reef to that at Beaton's Creek. It really hasn't even been explored. The thing doesn't even have a hammer mark, or didn't have a hammer mark on it until we found it and beat the living snot out of it. That's one target. There's the West Virgin Creek area, which is another target. But we have several things we would like to tackle once we get to cash flow.
Well, then cash flow is hopefully going to be coming fairly soon. How's the cash position now?
We have about a little over $4 million at this point. I speak in Canadian dollars.
Sure.
We do have some payments we have to make associated with the acquisitions that you can read back through news releases. It's on the order of I think a few $100,000, $500,000 or $600,000. But we have sufficient money to get oriented towards this trial mining scenario, and we are looking though at potentially capitalizing that bigger project down the road. So I'm looking at various options right now, but I'm actually quite comfortable where we're at.
So your focus this year and going into 2016 will be primarily on production, I guess, and then will you be doing any exploration? I suppose you will be, right? But primarily interested first in getting cash flow. Yes,
we'll be doing some exploration. We've got to meet work commitments, or what are called the minimum work commitments, or expenditures for the government on various tenements. So we'll be doing work on those, but it's not going to be what I call our main focus. But I would say, some of the news you see over the next few months will focus on that exploration.
All right. So aside from the new 43-101 resource numbers, which are coming out shortly, I think by the 20th or sometime like that of this month?
Yeah, that's the target date given to us by the engineer.
Aside from that, then, the drivers that the investors should be looking at?
Beyond that, it's going to be all, like I said, as soon as that comes out, we can move towards the economic study. And it's all about how we're going to progress the project, towards a development scenario.
Boy. Yep. I look forward to that. I'm looking forward to that, Quinton. You don't know how much. Well, you probably do. You know that I've been a big supporter. I really love this story, and time will tell. But it seems to have all the potential for success that I can see. I've tried to find out where the fatal flaws are, and if anybody out there has some ideas about where the fatal flaws are, nobody would like to know more than Quinton Hennigh, I suppose, about that. But I'm sure that you've racked your brains day and night over this for several years now, Quinton.
I've looked at this project and all aspects, everything from the geological side to the technical side to the permitting side. And this is one, we're in a great jurisdiction. Australia dollar has fallen, so gold's high here. The margins are potentially high. We have got so many things working for us. I'm just extremely encouraged. Basically, this is one I can see going for the jugular on here.
Anything else you'd like to add today, Quinton, before we say goodbye?
Jay, I think we've covered most things. It's been actually a very productive discussion. I appreciate it, and look forward to talking more in the future.
Oh, I sure do. Thank you very much, Quinton, and we will look forward to keeping in touch. And even when you're not on the show, I will let my listeners know what's going on when there's some important news releases. So thank you very much.
Thank you.